Hi, and welcome back to the LLQP video series. We're just going to spend a few minutes right now looking at what happens once the underwriter receives the application. You'll remember from earlier in the course that the underwriter is the person at typically head office who makes the determination as to how we're going to treat this client based on the information received in the application. Now it's expected that the agent would have a pretty good understanding of this process. There's an expectation that the agent would engage in some what we call field underwriting. And field underwriting is basically the application of your knowledge of the underwriting process to save submitting applications that are most likely to get declined, or at least to have an idea of what's likely to happen when you submit an application. And lots of insurers submit guides, underwriting guides to their agents to help them with this field underwriting process so that, for example, when you have a client who's previously been diagnosed with cancer and treated for that cancer, you might be able to crack open the field underwriting guide and look to the page on cancer and say, oh, this client hasn't been free and clear yet for 5 years without any kind of recurrence. We probably shouldn't bother applying for insurance yet. So it is expected that you would have some understanding of this. Like I said, a lot of insurance companies will help you to understand their particular underwriting decisions, but you do have a responsibility to understand this, and it's good to be able to help your client to understand what to expect as well. So basically, there are 4 possible outcomes that can result when we submit an app. The one we're hoping for, obviously, is that the underwriter says, hey, that client's great. We're going to deal with them exactly as anticipated. We're going to accept the risk. And if we accept the risk, basically you'll have premiums charged at a standard rate. So you'll have a standard premium charged here, and you'll have no exclusions or modifications to the policy. That's really what we're hoping for. Okay, that's great. And actually, there's even a higher level that we can reach here. Not all insurers offer this, but sometimes you'll even have the ability to have a client rated at some level better than standard. That's some sort of an exclusive rating. Insurers call this by a number of different names. They might attach a word like gold to it, or super standard or above standard, something like that, a premium. But really, for exam purposes, we should be concerned primarily with just accepting the risk on an unmodified basis. So that's our best case. Our worst case, of course, is that the insurer will decline the risk. That is, the underwriter looks at the application and says, we really have no business insuring this person. They represent too great a risk for the pool of insureds. We're concerned that if we take on these types of risks, we'll end up paying out too many death benefits too early. We would really have to charge all of our insured such a large premium in order to take on these risks. This just wouldn't be responsible. So this basically says, you're not going to get insurance with us. It probably has an implication of don't bother trying ever again. Although you will run into scenarios where somebody has been declined in the past and accepted at some point down the road. That would typically be years and years later, 5 or 10 years later maybe. So then obviously in between we have some middle ground here. And one of our middle grounds would be that we issue a policy, and this is probably what's most common today, that we issue a policy on a modified basis. And what we mean by on a modified basis is that you might pay a higher premium. That is, you would represent a substandard risk. So that's one possibility here. Or possibly in addition, you might face some sort of an exclusion. Possibly with disability insurance, although typically not with other forms of insurance. You might even have a modification to coverage. That is, you might have to wait longer than another person like you to get benefits. Or you might not receive benefits for as long as another person like you would. But that's really only normally the case with disability insurance. Typically, you won't see that kind of thing with life insurance. So you'll see a higher premium, or what we refer to as a rating. Normally, that's what's done in life insurance contracts. It's far more common to see a rating offered on a life insurance policy. And exclusions would be more common with living benefits policies. So, for example, if we have somebody who has a previous history of a heart condition, they would almost certainly, if they get accepted at all, get rated for life insurance. In reality, they would probably get rated as well for a disability policy, but somebody applying for disability insurance with, let's say, a previous knee injury, they're not going to get a higher premium for that knee injury most likely, or at least that won't be their biggest concern. It will be very common, though, to attach an exclusion to their policy for that knee injury. And then we have another kind of middle ground here, and that is the insurer might postpone the risk. This looks very much like a decline, but it's not really as serious, because when you postpone the risk, you say, look, we have a concern right now, but we think that with proper attention to this particular concern, such as high blood pressure or elevated cholesterol, we think that if you come back and see us in a year or two with that condition having leveled off, that we'll be able to deal with you. So this would basically just say, hey, we want to deal with you, we just can't do it right now. So just come back maybe in a year or two, and maybe then we can deal with you. Probably if you do end up doing that, you'll still end up with one of these policies with a modified risk. This is basically the 4 possible outcomes of the application process. When we get into disability insurance, we'll look at the modification of this risk in more detail, because that's really where we have a lot of provisions available where we can modify the risk one way or another, but you typically won't see that outside of disability insurance. I hope that helps to understand the consequences of submitting the application and how the underwriter will look at that application. Thank you very much.